you're giving up almost a quarter of your earnings for the year, which is like working 3 months for free. Why would you, or anyone for that matter, do that? Here comes the S-Corp to solve this problem. What is an S corporation and when should you make the S Corp election? These are some of the most common asked questions by business owners. Let's talk about everything you need to know about S Corps and when it makes sense for you to make the S Corp election. Now, before we continue, if you are looking to lower your taxes to the fullest extent through proactive strategic planning, schedule a consultation with reserve tax advisors to see how we can help you do just that. The number you see on your tax return isn't what you're legally required to pay. You can do something about it to get that number to go as low as possible to keep your money where it actually belongs. We specialize in uncovering all the different opportunities you have to lower your taxes as much as legally possible through our tax analysis process, customized just for you. Let's all stop overpaying in taxes and keep the money where it actually belongs. Schedule your consultation today. Now back to the video. Okay, so let's start this off by going over what an S corporation is in the first place. An S corporation is generally seen as the next step in your business, especially when you're at a point making consistent income from business activities. And it might just be the move you need to make to start saving on taxes. Now, let's talk about why you would want to become an S corp in the first place. One of the main reasons you would want to make that election to become an S-Corp is for tax savings that the S-Corp gives you. Now, this doesn't mean you automatically save on taxes just because you're an S-Corp, but you need to make the right moves for the tax savings to actually happen. You see, when you are a sole proprietor or a single member LLC, you pay what's called a self-employment tax, which consists of 12.4% of Social Security tax and a 2.9% Medicare tax, making the total tax 15.3%. Now, when you work for a company and you earn a W-2, you split this tax with the employer. So you would pay 7.65% as an employee, while your employer pays the other 7.65%. But when you are a single member LLC, you're essentially paying double the amount since you're both employer and employee. As you can see, the self-employment tax is a whopping 15.3% on 92.35% of your income right off the bat. Now, that was a lot of numbers and percentages, so let's take a look at an example. There's a lot more to this calculation in practice, but we're going to simplify things just so we can understand the concept and see where the savings come from without making things too difficult. Now, for this example, let's say you earned a nice clean $100,000 in net income as a single member LLC with standard deduction. You take 92.35% of your net income of $100,000, which gives you a taxable income of $92,350. Then your taxable income of $92,350 will be taxed at the 15.3% self-employment tax, which will be $14,130. When we subtract the $14,130 of self-employment tax from your net income of $100,000, this leaves you with $85,870 after self-employment taxes are taken out. Now you take your net income of $100,000, deduct the employer portion of the self-employment income tax, which is $7,065, then reduce your taxable income by the standard deduction of $16,100, which gives you a taxable income of $76,835. Now, for the sake of this example, let's say you are in the 22% tax bracket. That will be an income tax of over $8,000, giving you a total tax bill of over $22,000. You're giving up almost a quarter of your earnings for the year, which is like working 3 months for free. Why would you, or anyone for that matter, do that? This was just an example, but you can see how much self-employment tax drains your earnings. So here comes the S-Corp to solve this problem. Let's go over some of the requirements of an S-Corp. Now, the first thing is you need to pay yourself a reasonable salary with a W-2. A qualified professional can help you determine what is considered reasonable for your position. The second thing is you will now file a business return on the Form 1120-S. This will need to be filed before your personal return gets filed, as you will need to schedule K-1 from the S-Corp return. Now that we know some of the big requirements, here is where the tax savings actually come in. As a shareholder of an S-Corp, you have 2 ways to take money out. You can take out a W-2, and a distribution. The self-employment taxes that you pay will only be on the amount that is on your W-2. Your distributions are not subject to self-employment tax. Let's go over the example from before, but structure it as an S corporation to see how that changes the outcome. Now, when we go back, we have the same $100,000 in net income. However, you are now an S corporation. Let's say your reasonable compensation is $50,000. The remaining $50,000 is available to you to take as a distribution, which is not subject to self-employment tax. The calculation will go like this. Self-employment tax on $50,000, which is on your W-2, is around $3,800, with the S-Corp also paying $3,800 that can be deducted on the S-Corporation's return. The remaining $50,000 will be available for you to take as a distribution, which is not subject to self-employment tax and will only be taxed as ordinary income. Now that we have $50,000 on your W-2 and around $46,000 from your S-Corp, your gross income will be $96,000, where we then deduct the standard deduction of $16,100 to get your taxable income of around $80,000. The $80,000 will be taxed as ordinary income, which will give you an income tax of around $12,400, with your self-employment tax being $3,825. Your total taxes will be a little over $16,000 as an S corporation compared to over $22,000 as a single member LLC. By making the S Corp election, you have saved over $6,000 in taxes. This is the start of your tax savings after using your S corporation properly, and we can continue to do the strategic planning to bring the taxes down even more. As you can see, making the S-Corp election and using it properly can save you an incredible amount of taxes, especially if you're earning higher income. This is just one of the many ways we can help you keep your money in your pocket. Now, if this video has helped y'all, if you learned something from this video, please leave a like and subscribe, as it will really help the channel out and help get this video out to as many people as possible. I also do read all the comments, so be sure to leave a comment and I'll be sure to answer any questions that you have for me. That's it for this one. Hope you learned something valuable today and what an S-Corp actually does for your business and how it can actually save you on taxes. Thanks for watching this video, and I will see you on the next one.